Stock picker Cathie Wood of ARK Invest is utilizing the current market volatility to her advantage by buying the dip on huge growth names like Tesla and Robinhood, whose shares have struggled during the wider sell-off in January. Wood is trying to make up for the underperformance of her funds by investing in companies like these. Taking advantage of a drop in the electric vehicle maker's shares after its reports, Cathie Wood of ARK Invest piled into the company. Wood has been gradually increasing her stake in Tesla's stock for the past few months. In her opinion, how much is Tesla worth in the long run? If you want to know more, just keep watching. After the popular stock trading app Robinhood's price hit a record low of less than $10 per share on Friday, following a disappointing quarterly earnings report, ARK Invest's founder and CEO bought 2.58 million shares. Using the $12 billion from her flagship ARK Innovation ETF, Wood has amassed a nearly $200 million investment in Robinhood, according to statistics from Morningstar. Although the stock has fallen over 70% since Robinhood went public last year, Wood has continued to buy shares of the company even after it fell below its IPO price of $38 per share in late October. Since the beginning of the year, Tesla's stock has dropped by over 20% as part of a larger sell-off in growth among technology stocks. Wood's recent buy may indicate that she now considers the stock to be properly priced. Wood's largest asset in her flagship fund is Elon Musk's electric vehicle company, which accounts for nearly 8% of the ARK Innovation ETF and is valued more than $900 million as of the most recent Morningstar data point. Using its flagship ARK Innovation ETF and the ARK Next Generation Internet ETF funds, the investment firm acquired about 33,482 shares of Tesla at a cost of over $28 million at the stock's last closing price in early February. After Tesla announced it would delay the release of new vehicles until next year due to chain supply delays, the stock price fell 11% to $829.10, its lowest close in 3 months. This year's forecast was optimistic. It claimed, Cathie's ARK, a newsletter service and online community that keeps tabs on the asset manager, reports that the fund started selling off its shares of the company in August of 2021. After the leading electric car manufacturer postponed the release of new vehicles until next year due to supply chain issues, Tesla Incorporated shares fell in January, pulling down rivals. CEO Elon Musk said on a quarterly conference call that Tesla would not launch new models like Cybertruck this year because it would dent volume growth in the face of supply chain headwinds that would be alleviated only next year, causing the stock to drop 8%, down 30% from its record high in November, and set for its biggest one-day percentage fall since then. Instead of releasing brand new models, he stated Tesla would double production of its current lineup in 2022. The news is not good for established automakers and newer companies that have pledged to release new types of electric vehicles in the near future. Even Tesla is struggling. Frank Curcio, CEO of Curcio Research, has predicted that many new models' volume growth could be delayed until 2023 since other EV manufacturers would not be able to create these vehicles as quickly as they want to. Even more so than the Nasdaq, shares of other electric vehicle manufacturers plummeted. Rivno, the stock symbol for Rivian Automotive Incorporated, fell 9% and was headed for its lowest closing since the company's market debut in November. The share price of Lucid Group Incorporated fell 11%. While Nikola Corp declined by more than 7%, shares in Lordstown Motors Corp Radio dropped by 8%. Stock in Chinese electric vehicle manufacturer Spang Incorporated fell by over 9% in the United States. Despite the fact that analysts have predicted that meeting Tesla's volume ambitions would require the introduction of a $25,000 model, Musk has stated that the company is not currently developing such a vehicle. After Tesla's release, at least 6 analysts increased their price predictions. Some pointed to optimistic growth projections that ignored supply chain concerns. Tesla's current price of $862.89 is 26% higher than the median analyst price forecast of $1,087. ARK Innovation's largest holding is still Tesla, but the electric vehicle maker's share of the ETF has decreased to 8% from 11.2% at the end of October per Refinitiv data. In September, Wood stated that in 5 years, she expects the stock to be worth $3,000. Pre-market trading on Friday found Tesla down 1.5% at $817, having lost nearly a third of its value since reaching an all-time high on November 4th. In 2020, the $11.48 billion ARK Innovation ETF had the best return of any U.S. equity fund monitored by Morningstar. However, the fund's portfolio of high-growth, high-valuation companies suffered as a result of rising interest rates, placing it among the worst performers of 2021. ARK Innovation has had significant losses across the board in its main holdings over the past year. This includes the streaming business Roku Incorporated, NASDAQ RRKU, Teladoc Health Incorporated, NASDAQ TDOC, and Zoom Video Communications Incorporated, NASDAQ ZMO. The company's main fund, ARK Innovation ETF, acquired 27,556 shares on Monday, up from 27,799 shares on Thursday. With Tesla stock trading at over $920 per share as of late, the total value of these holdings is $50.9 million. ARK New Internet Economy ETF. ARK Get the ARK Next Generation Internet ETF has recently spent $5.2 million on 5683 shares of Tesla that were purchased in February. According to CNBC, these acquisitions are ARK's first purchases of Tesla stock since June 2021. ARK sold Tesla shares in November and December for a profit, though Wood emphasized that she still has a favorable opinion of the stock. ARK Innovation's largest holding, at 8.2% of the $13 billion total, is also its most important. Wood predicted in September that Tesla would average $3,000 per share. According to Yahoo Finance, our estimate for success has increased. The size of their market share is a major factor. From the end of 2017 to the present day, it has not decreased but rather increased significantly. Stocks in the technology sector were pummeled by rising bond yields and expectations of interest rate hikes from the Federal Reserve, including Tesla, which fell 31% from January 3rd to January 27th. However, the share price has increased by 11% since then. Recently, Wood has argued that market downturns in technology stocks present compelling investment prospects. In a presentation to investors last week, Wood emphasized the need of keeping in mind the company's long-term investment horizon. Our time frame is 5 years out. I've never lived in a time when there was so much widespread innovation. On Friday, in the midst of the most recent issue involving Spotify, the founder of ARK Invest also sold 70,000 of his shares in the company. After hearing the unsubstantiated claims about COVID-19 on Joe Rogan's podcast, several musicians decided to stop using the service in protest. Wood's Spotify stake remains significant. Morningstar estimates that this is one of her 10 largest holdings, worth about $500 million, and hence one of her flagship funds. Wood warned investors last week that innovation is on sale as the broader tech stock market dropped, but she is unfazed by the market volatility. We take advantage of uncertainty, she continued. When going through these sorts of corrections, we focus on the names of those for whom we have the strongest convictions. Wood shot to stardom in 2020 thanks to a nearly 150% increase in her flagship fund, but she has since underperformed the market. While the S&P 500 gained 27% in 2021, the ARK Innovation Fund lost 24%, or nearly a sixth of its value. This year so far, with the Federal Reserve tightening monetary policy and getting ready to hike interest rates, the fund has dropped another 20%. Riskier growth stocks, especially those of technology businesses, have been dumped by investors. After dropping more than 10% from its November record highs, the Nasdaq Composite Index entered correction territory in January. After what occurred in 2021, Wood would be foolish to lose out on the Tesla uptrend. Wood gave up some potential gain by selling early, but ARK has made a lot of money off of her Tesla stock. There would have been an additional $115 million in value for the shares that were sold in late September. The ARK Innovation ETF continues to hold a sizable position in Tesla. In light of ARK's well-known $7,000 price prediction for Tesla shares in 2024, the sale of Wood has the potential to confound investors. But last year, she gave CNBC an explanation, saying that the stock never dropped out of the top spot in our portfolio. This upward gallop from $178 to $900, or nearly $1,000, would have represented around 20% of the fund if we hadn't taken profits along the way. That's not a good way to manage a portfolio. Constantly monitoring and adjusting our position sizes is a priority for us. Do you think Cathie Wood is right in her assessment? Leave a comment below.